what are the tools of physical policy, including their advantages and disadvantages. So my friend, we have already discussed that physical policy can be, there can be a surplus or there can be a deficit. When there will be surplus, when taxes, when income will be more than expenditure. We have discussed that. And the point is, when there will be a deficit, when expenditure will be more than income. So there are two tools, basic category, I will say broad category. Physical policy have two tools. One is expenditure tools and second is income tools. One is spending tools and second is income tools. So please write on first point. Physical policy tools can be discussed in physical policy tools can be discussed in two categories. They can be discussed in two categories. The first is spending tools. The first category is named as spending tools and the second is named as revenue tools. Very simple, very intuitive. When I say physical surplus, it means when revenue is more than expense, and when I say physical deficit, when expense is more than revenue. And expense have three tools, or we can have three types of expenditures which a government can do in physical, which are to be accounted in physical policy. And there are two incomes. When I say spending tools, I also mean expenditure tools, and there are three types of expenditures which a government can do. One is the transfer payments. Second is current account, current spending, current account spending, current spending, and third is capital spending. Please prepare the flow chart as it is, as I have prepared. I repeat, first is transfer payment, second is current spending, third is capital spending, and within taxes, within incomes, direct taxes and indirect taxes. So these are the two taxes, direct tax and indirect tax, and these are the three. So in total there are 5 tools. So I will be discussing each and every tool with you. I will be discussing the nature of that and then pros and cons, and then we will finish this lecture. But this lecture is more important, so you have to give me 100%. Now the first point, the second point I am going to start with is named as spending tools. That what are spending tools? We will be focusing towards spending tools. When I say spending tools, that what are the areas in which government spend, or what are the areas of government expenditure. So I have just told you there are 3 points: transfer payments, current spending, capital spending. 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 Now what is transfer payment? When government of any country gives the money free of cost to the citizens in name of social security schemes, in name of medical help, or in name of insurance benefits. That's something which is given by a government to its citizens for social security purpose, for insurance purpose. That is named as, I will say, unemployment benefits. That is named as transfer payments. So A point, it means to give money to the citizens. It means to give money to the citizens of the country free of cost. I repeat, it means to give money to the citizens of the country free of cost. It means to give the money to the citizens of the country free of cost. That is named as transfer payments. It means to give the citizens money free of cost in terms of, for example, social security schemes, unemployment benefits, etc. Now, in the GDP, we have discussed that in the aggregate chapter, output chapter, we have discussed that GDP does not include transfer payments because these are not being produced. These payments are not being done in respect of prime production. So I will say transfer payments means money given to the citizens of a country free of cost and not included in GDP. Now, what is current spending? Now, the salary which is being paid by the government to its employees, central government employees, state government employees, to the secretaries, to the employees, permanent employees, temporary employees, that's something, that expenditure which a government do, that is named as current spending, and it is a spending tool too. So we are on spending tools, expenditure tools. The first is transfer payment, the second is current spending. When I say current spending, it means the expense on current salary on the which is revenue in nature, I will say, which is recurring in nature. Every month they have to pay. That is named as current spending. So please write down, it implies salaries and allowances which the government is paying to its employees, state government / central government, And now the point is, sometimes you have seen that in seventh pay commission or any commission which has been introduced, the increase in salary is also there. So that increase in salary is also a current spending, because government has to increase their salary also. So there are different types of pay scales commissions in India. We are into seventh pay scale, and that has been introduced, with the help of which the increase is there in the salary. And when the salary is being increased, generally those people, whose salary is increased due to the pay commission, they generally expense it in discretionary items, in purchasing mobile phones or FMCG goods. So please write down current spending. I have given the example of seventh pay commission, and it will increase the sale of FMCG discretionary goods. And the third tool of spending is capital spending. So my dear friends, I have told you physical policy has two tools. One is spending tools, second is income tools. When I say spending, transfer payments, current spending, capital spending, infrastructures, airports, dams, bridges, all the framework which has been produced, which has been constructed, that is named as capital spending. And it is very important for the nation, for any country it is important. Just like see the China, they have built up a huge better infrastructure, because for further future growth, capital spending plays a very important role. So please write down C point: government expenditure on infrastructure, building dams, government expenditure on infrastructure, government spending on infrastructure, building dams, investing into research and development. That is capital expenditure, that is capital spending. Now the point is, why this government is doing spending? Why? What is the need? What are the justification? Because for defense services, they have to employ the people, the defense people, air force, and for the future economic growth, they have to do something here. Capital spending, no doubt we will not be getting the benefit at current position at T0, but in future time period we will be getting the benefit. So it is important to have this type of spending. So why there is a need of government spending? It provides services such as national defense, and for a country like India, it plays a very important role. Necessity of capital, necessity of capital spending for economic growth, because in coming days there will be economic growth, and for that, for substantiating it, we should have a capital expenditure. So this is about spending tools. So I am coming to revenue tools. Revenue tools for the government, can be said as tax, and tax can be divided into two parts. One is direct tax and second is indirect tax. So I will be focusing for next 2-3 minutes in regard to tax. Tax is a source of income. Lagan, kar, it is a source of income for the government. And there are two types of lagans. One is direct lagan and second is indirect lagan. When I say direct lagan, it means directly you are charging from that person. Income tax is a direct tax. Wealth tax is a direct tax. Municipal tax is a direct tax. State duty is a direct tax. Corporation tax is a direct tax. It means if you are charging a tax directly from Bhupesh Anand on his income, that is a direct tax. You getting a point? All direct taxes are progressive in nature. I repeat, all direct taxes are progressive in nature. When I say progressive in nature, it means that as the income grows, as the wealth grows, the tax rate also increases. It means because the objective of physical policy is to minimize the difference between rich and poor. So how we can minimize the difference between rich and poor? If I'm charging the same rate of tax from Mukesh Ambani, and if I'm charging the same rate of tax from middleman, no, this is not okay. So in order to minimize that difference, direct taxes are progressive in nature. It means if you are on the higher slab, you have to pay more tax. If you are still on the more higher slab, you have to pay some more tax. So that's something, that scenario is named as I will say direct tax, and it is progressive in nature. So let's start with the journey. Direct taxes are levied on income and wealth. First point, direct taxes. I have started with the tools. The first tool is tax. Within tax, I am going to start with direct tax. Direct taxes are levied on income and wealth. It means income of Bill Gates, I will say, is to be taxed. Income of any person, I can say Warren Buffett, it is to be taxed. Wealth of Warren Buffett is to be taxed, and Warren Buffett has to pay the tax. Bill Gates has to pay the tax. So that type of tax which cannot be, the burden of which cannot be shifted, I will say that is named as direct tax. And because it is being paid by that directly, so I will say it is named as direct and progressive in nature. So please write down B point. Direct taxes are progressive in nature. It means as they are on this type of slab rates, as the income grows, they have to pay more amount of tax. So that's why they are named as progressive in nature. I have given the picture of Mukesh Ambani. Let this person be Mukesh Ambani, and let this person be a common middle businessman. Now this Mukesh Ambani income tax, wealth tax rate should be more than, because this person is earning huge income, so it will fall under a huge top levels slab rate, and hence in top level there is a higher tax rate, so as compared to normal businessman. So I will say tax is a income, it is a physical policy tool. It is the income side. Taxes are of two types: direct tax and indirect tax. Direct taxes are charged whose burden cannot be shifted. Income tax, wealth tax, estate tax, and the person has to directly pay that tax. And next is indirect taxes. Indirect, it means the burden of which can be shifted. If you are going in a hotel and you are having your food there, that you have seen that some taxes being added, GST is being added, CGST, SGST, IGST, all those different taxes, and entertainment tax, and service charge. All those taxes are being named as indirect tax. These are being collected by that person on behalf of government. So these are named as indirect taxes, the burden of which can be shifted. The burden of which can be shifted, that is named as indirect tax. And all indirect tax are non-progressive in nature. I will tell you why. First, write down. Indirect taxes are levied on goods and services. For example, in India, in 1st July 2017, we have started with a new concept named as GST, Goods and Services Tax. It means the tax will be charged on goods and services. No excise duty, no custom duty, no VAT. Now only one tax, one nation, one tax, no service tax. One nation, one tax, and that is GST. So GST, I will say, is an indirect tax, the burden of which can be shifted. It is not progressive in nature. When I say not progressive in nature, it means Mukesh Ambani will have to pay the same amount for that product, and a common rickshaw wala has to pay the same amount of product. For example, both are enjoying Ramdev Baba toothpaste, and the cost price and the sale price of Ramdev Baba toothpaste is 30 rupees. So Mukesh Ambani will also be paying 30 rupees, and this common man will also be paying 30 rupees. And in that 30 rupees, some tax part must be there. So it means tax part, tax element, both are paying same, irrespective whether one is rich or poor. So I will say indirect taxes are not progressive in nature. So write down indirect taxes are levied on goods and services. Indirect taxes can be levied to reduce consumption of some goods. In case we want to reduce the consumption of cigarettes, tobacco, alcohol. If we want to reduce the effect of alcohol or tobacco, we can levy huge rate of indirect tax, huge rate of GST on these types of products, just to de-eliminate them, just to discourage the sale of these products. So B point is can be levied to reduce the consumption of this. Indirect taxes are non-progressive in nature, which I have just told you that that Ramdev Baba toothpaste will cost same to Mukesh Ambani and same to common man. So they are not progressive in nature. Now the next point I am going to shift with is what should be the desirable attributes of a tax policy. I repeat, my friends, what should be the attributes? What should be the desirable attributes? It means what should be the qualities of a tax policy? Which qualities should be present in the tax policy? That is named as what are the attributes. Now you tell me before watching this, tell me that what should be the policies of what should be the qualities of a tax policy. It should be simple. It should not be comprehensive. It should not have any relation with market forces, what is happening in the market forces. And direct taxes within that physical policy should be progressive in nature. And the objective of that policy should be to discriminate the difference between rich and poor. So I will say these should be the attributes of a best optimum tax policy. So please write. Desirable attributes of tax policy. First is simple to use and enforce. Simple to use and enforce. Government of India is doing hard work just to simplify the payment of tax and to enforce. So simple to use and enforce, least interference with market forces. It means the tax policy should not interfere with the market forces. It means these two are separate, this is separate and this is separate. So tax policy should not be confused or should not be dependent or should not be related with market forces. Horizontal equality, it means if two persons are standing on the same footing, then people in similar situations pay similar tax, then they have to pay similar tax. Vertical equality, it means the tax paid by rich man should be more as compared to poor man, then only there will be a vertical equality. Rich people should pay more tax. So these are the best qualities of, I will say, attributes of tax. Let's see something with the tools from Google Baba, that what is physical, tools of physical policy. Tax rates, income tax, corporate tax, excise, government spending, these are the tools of physical policy. The government uses physical policy to influence the economy. These are the objectives which we have discussed in the last lecture. By adjusting revenues and spending levels. By adjusting revenues and spending levels, in the United States, both the executive and legislative branches of the government determine physical policy. Physical policy is based on the theories of British economists. We will be doing Keynes, yeah. Tools of physical policy. We are on the tools of physical policy. The one tool is revenue and second is expenditure. Revenue receipts, tax, non-tax and all that we have just seen. Tools, government earning, government spending, revenue receipts, capital receipts, tax, non-tax, direct tax, indirect tax, and we are on direct tax and indirect tax. And that too, that what should be the best qualities, best qualities or the best features of a tax policy. Because then only we can get the advantages of physical policy, how we can enjoy the benefit of physical policy. So my next topic in today's lecture will be what are the advantages of physical policy and what are the disadvantages of physical policy, and that too will conclude this chapter with this lecture. So what are the advantages of physical policy? Can have a significant impact on the economy. If that we are charging a very simple and refined tax policy that is horizontal equality, that has vertical equality, and it is not related with market forces, my objectives of economic growth can be achieved. So first is can have a significant impact on economy, can be discriminating, which allows different regions or consumption habits to prosper. It means if a physical policy help in getting the growth of all the sectors, there should not be any difference between north and south. There should not be any difference between this region and that region. All the regions should grow. That is the main objective of physical policy. Make the distribution of income fairer through progressive taxes and benefits. It means income tax and wealth tax, they are progressive in nature, and once they are progressive in nature, we can charge more tax from the rich people as compared to the poor people. So just write down what are the desirable attributes or after that advantages of physical policy. Quick implementation of tax, very simple. That GST we have implemented it throughout the nation within very short span. So quick implementation without additional cost. Quick implementation of tax, without additional cost, like GST. Social policies such as discouraging tobacco, we can increase the indirect tax rate and we can, minimize that use of tobacco, alcohol and cigarettes by increasing that. So we can achieve that social objective also. So we are achieving growth objective as well as social objective with help of physical policy. These are the advantages. Now what about the disadvantages? Sometimes capital spending will take more time, and the accurate result of that there is a lead time in that. So the real impact cannot be seen quickly. So this can be a demerit that capital spending, we cannot have a real impact, Similarly, transfer payments, if you want to reduce, if you want to see the benefits of transfer payments, it will take some more time, There's a huge time lag between that. So please write down disadvantages of physical policy. Direct access and in transfer payments take time to implement. Direct taxes because you file your income tax return or wealth tax return after a year, so it takes some time, or it takes some 12 months because financial budget is prior to that year, that previous year, that financial year, so it takes some time. So this is a disadvantage, takes time, and transfer payments to implement. Capital spending also take long time to implement. Capital spending, once you are building infrastructure, dams, bridges, all that structure, it will take some time, and the real impact will be only can seen after that. So this can be a demerit. Announcing a change in physical policy, because physical policy is with the help of a physical budget, and that too is in advance, And once we have declared that in the coming year this tax rate will be there, it will impact the current spending also. People will will minimize their spending at current also, in the current year also. So this can be a disadvantage from economist point of view, that if we increase the physical policy tax rates, and because they have to be announced in beginning, so they affect even that current year spending also. So decrease in the aggregate demand can be there. So these are the demerits of I will say physical policy. So once again I repeat, demerits. When I say demerits, I mean direct taxes and transfer payments take time. Direct taxes and transfer payment take time to implement, hence delaying the impact of physical policy. Second is capital spending also take longer time to implement. Third is announcing a change in physical policy may have a significant impact on the expectation, on today's expectation. And what are the advantages? Quick and easy to implement. Okay, and we can achieve social objective. Then we have discussed what are the desirable attributes. It should have horizontal equality, it should have vertical equality, simple to use, least interference with this. So these are the tools and these are the attributes of a adequate tax policy. In this, my dear friend, I will be taking in this learning outcome, I have to discuss physical multiplier, I have to discuss Ricardian theory. No doubt they belong to this learning outcome, but I am not discussing in this lecture. I will be taking new lecture, lecture number 17. In that lecture, I will be telling you what I mean by physical multiplier, as we have discussed in that monetary policy, that what is money multiplier, money creation process. So similarly, we will be discussing something about physical multiplier and Ricardian theory in next lecture number 17. Hope you have enjoyed today's lecture. Be happy, be jolly, be chill.